Today we will take up the chapter Financial Statement of a Joint Stock Company. As all of you know, Joint Stock Company is an organization wherein you find more number of members and more capital. Minimum 7, maximum is unlimited. It is a voluntary association. It is also one of the type of business organization which is formed to get more capital to the business. So here, like any other business, even the joint stock company has to prepare the final accounts, that is the accounts prepared at the end of the year to understand the profitability and the financial position of the company. Because every business wants to understand whether the business is earning profit or not, is business in a good financial position, is solvent, or any problem is there with the financial health of the organization. So here, many people are connected to the business, that is joint stock company, that is owners, they are called as shareholders, directors who takes care of the business, decisions, creditors, government, customers, investors, policymakers, and the research students. So there are many people who use the information about company's profitability and financial position. The company has to prepare the final accounts. That final accounts, here it is called as financial statements. And this is a little bit tougher for you to understand, but still for an examination purpose, they have made it more simple. So financial statement, what we prepare is a summary of the entire 1 year's accounts. It is not for 1 day, 1 week, 1 month. So it is a summary of accounts for the entire 1 year. And it is going to talk about the profit or a loss earned by the company before tax, after tax, etc. What is the final result of the various operating activities and non-operating activities of the company at the end of 1 year. Not only that, it also gives information through balance sheet, the value of various assets owned by the company, the liabilities payable by the company, and the share capital, reserves and surplus, which is connected to, which belongs to the shareholders of the company. So financial statements are going to be prepared at the end of every year. They are the basic and formal information included in annual reports that every company uses to communicate the information about the financial, about the company to its shareholders, investors, and creditors, bankers, and all the other people, including the government. So financial statement is connected to annual report of a company. So annual report of a company, you can even find on the websites of any company. When you get into, you get the annual reports. Annual means 1 year report. So it includes several parts. So you have there 6 parts, as you can see here: director's report, auditor's report, financial statement, what I am discussing now at present, that is balance sheet and income statement, or we call it as statement of profit or loss, then cash flow statement, then notes to accounts, and segment report. So like this, there are several information included in annual reports of a company. So it may be director's report, maybe CEO report. So like that, the topmost officials will talk about it. So you find in the newspapers, if you quite regularly read, so banks will give, companies will give their reports, what happened in the last year and what is their plan of action for the next coming year, next accounting year. But this is all for knowledge purpose. And what is required from the examination point of view is how to prepare statement of profit and loss, that is the income statement, another name for it, and a balance sheet. Cash flow statement, you have a separate chapter later. So before getting into that, let us try to understand a little bit about the financial statements. We can call it as characteristics, or we can call it as nature. Remember, every business records all the transactions in the books of accounts through journal, ledger, in the chronological order. To know the results of the business at the end of the year, the summary of the entire transactions are prepared. That is balancing the account. A trial balance is prepared. You have done the trial balance in the first PUC. So remember, accounts will contain only monetary terms. It doesn't have qualitative aspect. It is only money aspect is recorded in it. At the end of the year, the trial balance is used to prepare the financial statements. So that is why we call that as the financial statements are based on recorded facts. So what is recorded in the books of accounts, the entire 1 year, that will be considered here for the purpose of preparing the financial statements. So we call it as historical cost also. We call it as original cost also. So various accounts are prepared as you've done in the first PUC. Cash account, share capital account, bank account, fixed assets account, every person's account, all are closed, and based on that a summary is prepared. The second is accounting conventions. So conventions are basically the rules followed by the accountants throughout the world while preparing the financial statement. Some assumptions, that is based on which the financial statements are prepared. That is also learned by you in the first PUC or whatever 11th standard. Like valuation of closing stock has to be done at the market price or cost price, whichever is low. So like that, different assumptions are there, which depreciation method to be followed. There are many methods, 8 to 10 methods as per income tax rules, which method to be followed. Then how to deal with the stationery. Is it an asset? Is it an expense? So like that, several information is given by accounting conventions. But to understand the financial statements, the financial managers and the accountants prepare the final accounts or statements based on the conventions. So it becomes easy to understand, easy to compare, and it gives clarity for who looks into the financial statement. Then accounting concepts are also therein. Again, you have learned basics in the first PUC that tells that the business is a going concern. The business will continue for a long time. That is called as going concern concept. Then all assets are recorded on historical cost. So like that, there are different concepts which we follow: accounting year concept, then realization concept, all those things, money measurement concept, all those concepts are included in preparing the financial statements. The next one is the accounts are made based on concepts and principles. Then also the personal judgment is going to be very important of an accountant who prepares the accounts, who records the business transactions. So personal opinion, estimates, judgments connected to how much provision to be made on doubtful debts, how much provision to be made on discount on debtors, creditors, and how to value the fixed asset, which depreciation method to be followed. So all those are taken into consideration while preparing the financial statements, which will have an impact on the calculation of profitability and value of assets and liabilities. So four important characteristics you should remember while preparing the financial statements, but you are not preparing, you will work straight away problems. Fine. Next, why do we prepare financial statement, or we call it as objectives of financial statements? So any questions you have, you can ask me. Objectives of financial statement. Why do we prepare the financial statement? I told in the beginning, the owners of the business, that is the shareholders, would like to know the results of the business, whether the company is doing good or not. That is profitability. They want to know about the financial position of the company. How much assets are there? What are the values? Liabilities are there? Share capital is there? Reserves is there, etc. So to provide all the information to them, as well as many other people, as I told, bankers, creditors, government, investors, to give them information, the financial statements are prepared. So first one, as you can see, first objective is to provide information about economic resource and obligations of business. Economic resource is nothing but assets. Obligations are nothing but liabilities. But this information has to be accurate. Otherwise, you may go wrong while taking a decision in the business. So it is very important for the decision makers, see to that every information recorded is adequate, proper, reliable, then only they can proceed further. Next, to provide information about earning capacity of the business. Not only that, what happened in the past 1 year, what is the profit of that or loss of that activities. That's not the only information that is needed for the various stakeholders. To predict the future, to compare the results with 2 or 3 different years, how it was happening in 2 years before, is there increase in profit, decrease in profit? So like that, to compare and to evaluate one business, that is that company's business, with other similar companies' business, and to understand what is the earning capacity of the business in the future. For this, financial statement is important. The next one is to provide information about cash flows. Cash flow is very important. That is, how much cash coming into the company, how much cash is going out of the company, or in last 1 year, how much money has come, from where it has come, how much money has gone out, how much cash has gone out, so where it has gone, for which purpose it has been used. Because investors, creditors, bankers would like to know about cash flow of the business. not just the recording of information. So the company is supposed to give a lot of information to them connected to cash flow. You have a separate chapter therein further. So this gives whether the business is actively involved or not actively involved in business transactions. So it should be a regular active business transactions, that is most important. Next, how well the management is using the resources of the company, that is the assets for the benefit of the company. So management decisions is very important, not just having assets, that is not sufficient. How well the company is using the assets of the company for the benefit of the company, for profit earning capacity of the company, how well it is adding value to the company and reserves of the company. So that is the one. Next is information about activities of business affecting the society, because all business organizations depend upon the society for various sources. So they are answerable to society, because business gets raw material from the society, raw material from the environment which belongs to society, then human resource for working. So to sell, customers are again from society. So how these business organizations, how this company is working, is it affecting the society good way or bad way? So social responsibility towards environment, is it polluting air, water, etc., etc.? For that, they have to give information. Then they have to give maximum information to the people through disclosing accounting policies, which accounting method they have followed for valuation of stock, for value for charging depreciation, and many more information. Business is stopped, for example, during Corona period for 2 months, 3 months. So like that, all the information connected to 1 year about policies, major decisions, agreements, so many things are there connected to business, all have to be included therein. So these are the 6 objectives of the preparation of financial statements. So financial statements will have uh, 2 parts. One is income statement, other one is the balance sheet. So both are prepared according to Companies Act of 2013, and balance sheet is a part of Schedule 3, Part 1 of the Companies Act, whereas statement of profit or loss or income statement, what do we call it as, is connected to Part 1, Part 2, Schedule 3. Same Schedule 3 is common. Part 1 is balance sheet. Part 2 is the income statement or profit and loss account. So actual format of the income statement as well as the balance sheet is quite different. Real one is much bigger. More information is included therein. But here, for exam purpose, for your easy purpose, for your understanding purpose, the income statement has been simplified. How much simplification is done here? I can say it is simplified by 3 times or 4 times. What you see is a shortest form of income statement, shortest form for exam purpose. But real income statement is very big. Lot of information is therein. Various steps are therein. So let us focus on this. This is Schedule 3, Part 2, which we prepare usually to find out the profit or loss of the business. So as you can see, 3 or 4 columns. Okay, first is serial number, particulars, note number, and connected to end of the year amount, end of the year amount. That is for whichever accounting year you're preparing for that. So we will go one by one. What are the contents? Have a look at it carefully. Revenue from operations. I will explain the concepts. What is the meaning of it? What it contains? Okay, I will explain everything. Revenue from operation is the income received from sale of goods, sale of services. Then other income other than the sale and the sale of service, sale of goods, other income. I'll explain that in detail. So 1 plus 2 becomes 3, that is total revenue. So 3 is total revenue, add 1 and 2, it becomes 3. Next, less expenses. They are not mentioned as less, but it is from the revenue, we deduct expenses. You have here several headings of expenses. This is the least one. Actually, you have a very less headings under expenses, but in reality, there are many more headings of expenses. So what are the expenses possible here? First one, cost of materials consumed. Second one, purchase of stock in trade. Third one, changes in inventories of finished goods, work in progress, stock in trade. All together, changes in inventory means changes in the stock value of finished goods, work in progress, etc. Next, employee benefit expense. Next, finance cost. Next, depreciation and amortization of expense, and which doesn't belong to any of this category will put under other expenses. So you can see how many headings of expenses: 1, 2, 3, 4, 5, 6. If any expense doesn't fall under 6 of these headings, then the 7th heading is other expenses. So we will prepare a short notes. We put the information is all headings. It's not one item. Under material consumed, you may have 10 items. So finance cost, you may have 4 or 5 items. Employee benefit may have 4 or 6 items. So we have to write that total and put it over here, therein. So 3 minus 4 will give profit before tax. That is 5. 3 minus 4. Then less tax again. Okay. That becomes current tax or current year tax. That becomes profit after tax. Profit after tax. That heading is not there. We have to include that. Profit before tax, less tax. In tax year is nothing but income tax. So less if you do profit after tax. So any questions you have in this, you can ask me. So let me go for information. What we have discussed therein. First heading was revenue from operations. Operations means regular business activity for which the business is established. For which the business is established. For which purpose business has been started. So some businesses may be manufacturing and selling. Some business may be trading, that is buying and selling of goods. Some businesses may be only selling of services, maybe like repairs, maybe supply of financial services like banks, insurance, electricity supply, water supply, transportation. So sale of not only goods, but also services. But mainly what do we get in the problems for you is sale of goods only, or sale of products. Don't get usually sale of services. So sale of products is cash sales plus credit sales less sales returns. Less sales returns. Sales of two types, cash sales, credit sales, and any returns happen, sales return. So you can see here, sale of service is also there. Other operating revenues are also there. But usually you don't get other revenues, usually get product or service. Less excise duty. Excise duty is a tax paid by the company for manufacturing the goods. For manufacturing the goods. For every unit produced in the factory, company is supposed to pay a particular percentage of excise duty. So that is a cost incurred by the company. So sales minus excise duty will be revenue from operations, the first heading. Next is other income. This is also income. Revenue from operation is also like an income. Other than that, second one is other income. Other than this, the business may receive interest, business may receive rent, business may receive dividend, business may receive profit on sale of assets, fixed assets, maybe land, building, or current assets like investment. So any discount received, so like that, gift received. There are different types of incomes. All incomes are taken under the heading other incomes. So we add these two incomes, then we go for expenses. We go for expenses. So you can see here, I explained revenue from operation, other incomes, that becomes total revenue. Next, we will enter into expenses. So that is cost of material consumed. So what is cost of material consumed? That is the total money spent by the manufacturing unit for manufacturing the goods. So that is called as cost of material consumed. So how to calculate that? So that requires, okay, manufacturing expenses also, entire this one. So other one is changes in inventory. That is how much of stock has changed. So that is going to be understood, okay, here by calculating the information called cost of goods sold. So how to calculate cost of goods sold? Opening stock plus purchase of goods minus closing stock will be cost of goods sold. And various other expenses are considered as a deduction. That will be change in inventory for the company. That is going to be the one. Next, we get into purchase of stock in trade. Sometimes businesses may not be in the manufacturing part, they may be into purchase and sale of goods. So we consider that how much of finished goods purchased, value, and how much is sold. There you are going to have opening inventory, less closing inventory, that is stock, to identify the purchase of stock in trade. Then that is going to be entered therein. When I work the problem, you'll understand better. Next, employee benefit expense. Whatever paid to employee for the work taken, for the work done by them, like salary paid, wages paid, contribution to employees, provident fund, ESI, leave encashment, bonus, HRA, DA, so commission, any staff welfare expenses, you name, bonus, there are many expenses possible, all will come under employee benefit expenses. Next, finance cost. So this is connected to money taken by the company for business purpose on which the company pay interest. So it is nothing but interest paid on bank loans, interest paid on various loans taken from other companies, maybe from directors, maybe from anyone. Then interest on debentures. The debenture is a loan taken from the public. So interest payable on that debenture is a loan taken from the public on that interest again. So interest paid. Next is depreciation. Depreciation is charged only on fixed asset like machinery, plant, furniture, vehicles, computers, so equipments like that. So how much of depreciation to be calculated as per the income tax or as per the problem given, we take that. Then amortization. Amortization means reduction in the intangible assets. So there are so many intangible assets, goodwill, copyright, trademarks, and the other various kind of intangible assets. So all those comes under amortization. So which do not come under all these will be taken as other expenses. So you have here consumption of stores and spare parts, power and fuel, rent, repairs to building, repair to machinery, insurance paid, rates and taxes, advertising, postage, audit fees, telephone charges, and many more. So whatever left over, all going to come under this itself. So anything left over, all those items comes under this particular heading. So this is going to be the one. Next will be tax. Tax may be given in problem, may not be given in problem. So if tax is given, we go for less tax. Otherwise, we end at profit before tax. So this is the format, is an explanation for whatever is there in the income statement. So if you have